Happy FOMC decision week to all of you who celebrate. Now, if you happen to be watching this and you have no clue what I'm talking about, well, hopefully you're watching this video in time because the upcoming trading week, the second trading week in the month of December, is going to be a pivotal one. Recently, really recently, we've had a pretty nice recovery. Just before that, the market had a sell-off. So if you net that all together, it's almost as if the market is stuck in neutral. And this upcoming week, this upcoming Fed decision is going to decide, do we continue higher and hit new all-time highs? Or is it going to be a kind of close but no cigar situation? We double top and then sell off for the remainder of the year. Obviously, this upcoming week is going to have that decision in it. And that's exactly what we're going to be breaking down in this video. Now, very quickly, before we get into all those important details of what you should be paying attention to for the upcoming trading week, I would ask you, if you haven't already, hit that like button, don't forget to subscribe, turn on those notifications. All that type of engagement really does help me out getting this video in front of other people who might care. So if you do that, thank you so much. Without further ado, let's roll the tape. Here's the skinny on the situation. When the market officially closed on Friday, here was the headline. S&P 500 closes higher, notching a fourth-day win streak and nearing record after light inflation reading. So the overall market, the S&P 500, as you can see after a little bit of a sell-off, pretty solid recovery. And as of close, we're actually only 0.73% away from an all-time high. Pretty much a similar situation in the NASDAQ. After a little bit of a sell-off, we'd had a pretty solid recovery. All-time high is 1.91% away. And for this upside gap fill, that's only 0.76%. And even Bitcoin, as I'm filming this, though it's not at an all-time high, we are kind of seeing a higher low, a little bit of a stabilization. And basically, this might be the nice base that a lot of people choose to get back into Bitcoin on. So overall, yeah, a little bit of questionable action in crypto, not as much in equities, but we are seeing a decent recovery. And if you ask me, I find it to be a little bit funny how quickly everyone's sentiment changes. Not long ago, everyone's saying, this is it, market's done for, we're going to take a big hit. And now all of a sudden, literally within a week or two, 5 reasons investors are feeling good about stocks again. Like I said, when it comes to the world of lamestream media talking about the market, it switches from bullish to bearish basically just based on how the recent day went. Anyway, regardless if you've played it recently to the upside or not so long ago to the downside, I hope you got yours because the Goonie Trading Discord definitely did. On Monday, making $650, Tuesday, $500, Wednesday, $600, Thursday, $660, and then to wrap up the week, $1,400. And if my math is right, that's a return of roughly $3,800. I did that on a 30K account, so it's just under a 13% return. And of course, if you want to join up with the Goonie Trading Discord, your entire first month is free. And the reason I do this is I figure, hey, why not test drive it to see if you like it before you have to pay? So first month is free if you put in that promo code Goonie, and then after that, it's only $60 a month. And basically on any of these one days, you would have paid for an entire year of the service. So if you ask me, is it worth it? Yes, but obviously that's my own opinion. So I say, hey, do your own research and why not take advantage of the free month? Anyway, whether you were able to make money or maybe not do as well as you wanted to, the golden question is what in the world is happening next? S&P 500 quietly rebounds to near a new record, not even 1% away. Where to next after a quick round trip? Now, obviously, I am not clairvoyant. I cannot tell you the future. I cannot guarantee where prices are going to go, but I could definitely point out the major things you should be paying attention to, and just maybe we can get an idea of the highest probability pathway forward. To kick off this conversation, I always find it's helpful to first look at seasonality. I do want to remind you that pretty much from midway through October to halfway through January, generally the bulls are in control, but there is a little bit of a hiccup in mid-December where there's a little bit of bearish seasonality, and that happens to be where we are right now. Once again, this is on the past 20 years worth of information. If you look at the last 5 years worth of information, December does slightly favor the bulls, but in the last 3 years, it's actually slightly more bearish. Going back to the 5 years, if we look at the weekly, this upcoming week, once again, is slightly bearish. And if we look at the 3 years, once again, it is slightly bearish. So it's not the most absurd bearish week we've ever seen, but I do want to point out that the bears, at least over the past 5 and 3 years, do have a slight edge. Now, whether seasonality comes to fruition or not is going to depend on one major upcoming event. On Wednesday, December the 10th at 2 p.m., we will be getting the Fed interest rate decision. And then 30 minutes after that, we will be getting the press conference from the Fed chair, Mr. Jerome Powell. Obviously, mark your calendar, set an alarm, do whatever you need to, but that is going to be the big event of the upcoming week. But just so you know, on Tuesday, JOLTS job openings, there is also a bond auction on Tuesday and on Thursday with initial jobless claims. And also this week, either the 11th or the 12th, we're also probably going to get the PPI, the producer price index. But anyway, I digress. The major thing is Wednesday, 2 p.m., the Fed interest rate decision. That's when it's all going down. Here's what we know as of right now. According to the Fed Watch tool, there's an 86% chance that we will be getting a 25 bips rate cut. As I'm filming this, the Fed fund rate is currently at 3.75%. There's an 86% chance that it will be dropping to 3.5%. If you look at what's going on Kohrs, they actually give it a 93% chance that we're getting a 25 bips rate cut. If you ask me, we're getting a 25 bips rate cut. Generally, when you look at what's going on with the watch tool, Kohrs, poly market, and even just the bond market in general, generally when they're all agreeing on one side, no one's really getting it wrong. So I would say pretty confident right now that in fact we will end up going down to 3.5%. And if you're watching this, you might be thinking, okay, if we already know that's going to happen, what's going to move the market? Well, let me remind you that 30 minutes later, we will be hearing from Jerome Powell himself, the chair of the Fed. And obviously he has a lot to say, and the market wants to know, is he leaning dovish or hawkish? What's going on with quantitative easing and tightening? Is he going to say anything about Trump and the next Fed chair? There's a lot that could impact the market. So yes, just his press conference in general is going to be important. And don't forget that every other FOMC meeting, you get what's referred to as the SEP, the Summary of Economic Projections. Like I said, you get it every other one. Projection materials, skip one, projection materials, skip one, blah, blah, blah. You get the point. This upcoming one, we will be getting another SEP. So that's going to be impacting the market. And that actually comes out before Jerome Powell talks. So that's a thing that could very, very much be sending the market either higher or lower, getting an understanding of the dot plot and all that good stuff of basically where they see unemployment going, where they see inflation going, where they see GDP going. That's going to be one. And then this time around, we're in kind of a unique situation where just maybe people might be asking about the next Fed chair. As of now, there's a 77% chance that it is Kevin Hassett. So that might come up. There might be an announcement. For all I know, President Trump might go rogue and choose to just put it out on the internet during the conference. So that's something that you should consider without a doubt. So once again, the star of the show this upcoming week is going to be on Wednesday with the Fed decision and everything related to it. If you ask me, Monday and Tuesday, we're going to be stuck in kind of a grinding pattern, maybe a hold pattern, where the bulls are most likely slightly favored, but I'm not expecting any exceptional moves until Wednesday itself. And then after that, your guess is as good as mine. But I suppose if you really force me to make a prediction here based on price structure, momentum, and option flow, my bias is personally bullish, but obviously based on new information, I might be updating that bias. Now, obviously, this entire discussion thus far has related to the overall market. I do want to let you know that there's a couple earnings. On Tuesday, you might care about GameStop, Cracker Barrel, maybe even Dave & Buster's. Wednesday, you have Chewy and Oracle and Adobe. And then on Thursday, Broadcom, Lululemon, and Costco. So in case you're playing individual equities, some of those definitely might have big moves. Definitely want to be putting that all on your radar. And I know I've hit you with a lot of information. Remember, I put all of this for free in the weekend newsletter. Once again, comes to your Sunday email inbox around 10 a.m. every single Sunday. I break down what's going on in the market after you get a cool picture of my cat Piper, cheat sheet for earnings, cheat sheet for the major macroeconomic events, and then the seasonality for each individual trading day. Monday is neutral, Tuesday is slightly bearish, Wednesday is slightly bullish, Thursday is slightly more bearish, and then Friday is definitely bearish. Like I said, that's just the Goonie newsletter. If you're watching this, you could get it for free. You don't have to pay anything. You never have, you never will. But more importantly, this upcoming trading week is going to be a pivotal one. Recently, the market sold off, and then after that, we got a nice recovery. Currently, the market is stuck in a little bit of neutral, and this upcoming week is going to be those big decision-making updates where we find out, are we pushing to new all-time highs by year end, or are we going to end up awkwardly double topping here and maybe the Santa Claus rally might not be happening? Whatever you decide to do, I beg of you to stick to your trading plan and please respect your risk. That's what I have for you today. I appreciate you stopping by. I appreciate the good vibes. I'll catch you in the next one. Peace.